if we do this for 5 years, we pay off the debt. If we keep valuation the same and we flip it, then we 2x, and that's great at scale, right? But what does that mean? That means that we can't cannibalize existing cash flow in our business to iterate into new tech. That's why you see all these cycles in legacy technology. They peak and then they start to, get private equity capital, and then eventually they trough. And then there's a new entrants that are coming in to replace the legacy infrastructure.
Yeah.
It's just a squeeze of the cash flow. And if the revenue's not expanding, then we're reducing costs to ensure that cash flow stays constant or is expanding on that product until we squeeze the life out of it. What happens? Well, new technology pops up, new players come up, and they ultimately start to take that business away from the bulwarks that are out there. We're just in this new transitional phase with AI being the catalyst that we can do so many things that you couldn't ever do by trying to refactor the existing technology that has existing cash flow being generated out of it.
Welcome to the Perpetual Growth Podcast with Zach Palmer, the show where we explore the strategies, insights, and stories that empower you to grow your business, strengthen your relationships, and elevate your health. Because growth isn't just about what you achieve, it's about who you become along the way. Today's guest is one of the sharpest minds in the world of finance and emerging technology. Someone who spent over 2 decades transforming how capital moves, decisions get made, and technology unlocks new markets. Cash Lafferty is the founder and CEO of PandoAlts, an AI-powered B2B platform that's redefining how alternative investments are accessed, executed, and scaled. Whether you're a wealth manager, fund, or fintech innovator, Pando is building the infrastructure that makes the entire system smarter, faster, and more connected. But Cash isn't new to this game. He's led growth at some of the most forward-thinking firms in the digital asset space, including FalconX, Liquidity Book, and Orbital Insight, where he worked alongside NASA scientists applying computer vision and deep learning to satellite data. From Wall Street to Web3, Cash has been ahead of the curve for years. If you're curious about where AI, finance, and execution are headed next, what that means for entrepreneurs and investors alike, you're in the right place. Cash, welcome to the Perpetual Growth Podcast.
Zach, thanks for having me.
Absolutely, my friend. I'm excited to have you here today. Now, I always like to start with this question because I think it really reveals a lot about who someone really is. What does growth mean to you right now in this season of your life?
Well, I've done 6 different kind of startup / growth companies, and I decided to start my own and found my own 2 years ago, 2-year anniversary, with 2 young children in my middle ages. So I guess I'm constantly looking at growth. I've foregone the typical path of kind of the corporate wheel, I guess, for building something new. And I identified a problem that is a large problem that I think I'm uniquely equipped to solve. So constantly looking for new tech, advances that are going to benefit people and change the way that they operate and do business for the better. I think that technology and automation brings a lot of value to people's lives.
That's awesome. So in a moment, I want to dive back into what you just said, solving, a new problem, and have you expand on that a little bit. But I'm also curious. I mean, this sounds really neat. You mentioned that you're building this company with 2 kids. These are your 2 kids, not 2 just young individuals. But
Yeah, no, my babies. Yeah, so 10 and 7. My son turns 8 this weekend. So.
Wow, that's amazing. Talk a little bit, how have you integrated them in the business at that age? I've got kids of, a fairly similar age, and we're looking at a lemonade stand, and you're moving them into, AI and financial ops. I mean, this is amazing.
Well, I just mean more generally, becoming a founder in my middle ages was
Yeah.
kind of a growth step, I guess, outside of, just taking a ride on somebody else's, plane. So, but the kids also did, move to Bozeman, Montana 5 years ago, where we've built a new life, having kind of spent the last 20 plus in between New York and San Francisco. So constantly kind of evolving and changing here.
Yeah, no kidding. I mean, Bozeman, that's a pretty dramatic shift from New York. You know, in every single context. How are you guys enjoying the transition? I bet they're loving it. It's like God's playground there, right?
It's great. They walk to school, and we've got a creek and a park across the street. So, in some ways, I call it green acres out here.
Mhm.
Kids running around, and the house is kind of an open door.
Mm,
So it's a good life for them,
yeah,
and nature. Being outside is, I think, an
yeah.
important part of growing up. And I grew up in Oklahoma before I made my leap to New York. So. I joke that I traded one teepee for another out here.
Yeah, there's a lot of truth to that. I get that too. That resonates with me on a super high level, on two levels actually, because I grew up in Washington State in the northwest corner, and we were always out in the like on the beaches or in the trees or cutting trails or doing something. And now I'm like, I get nervous if my kids walk down the street. So having an opportunity to live somewhere where you can kind of take a step back and lean back into comfortability and know that you're in a community where they actually can walk to school sounds like a pretty neat place to be. I mean, that's inspiring.
Yeah, the Bay Area changed quite a bit from when I first moved there to when I left. So
Mhm.
I was one of those transplants. I guess the people changing their license plates pretty quick when they moved to Montana.
Yeah, yeah, I hear that. All right. Well, going back to what you had said earlier, you identified a pretty big problem, and for every problem, I'm a firm believer there's also one, if not an infinite number of opportunities, potentialities. Really, and I also love the fact that you said, because it's just it sticks with me since on such a high level again, is I, I was a business owner for multiple business owner for 17 years, had the opportunity to work side by side with some of my superheroes. I did the corporate thing for a little while, but quickly realized this is not the place for me. And went back into entrepreneurship and kind of early midlife as well. How was that transition for you? And talk about the transition as it pertained to you identifying the problem that you are currently solving with PandoAlt.
Yeah, sounds good. So, there's typically a technological solution to a lot of the problems that we have, and particularly in corporate America, and doing manual work. My my first job when I moved to New York, I had a one-way flight to Islip and 5 bags, and decided I was going to go make it in the city. And I hustled my way to my first job, which was on a trading floor, and I got a job as a clerk. And I was essentially taking the trade blotters from all of the trading activity throughout the day and manually keying all that data into a risk management solution. So here I am, college graduate, and starting to question my decision in life to now be sitting on a desk typing from, one PDF into a spreadsheet. And over time, I started taking my securities licenses because I was bored out of my mind. And I realized in doing that all of this data had to be stored somewhere. So I started asking around, and I got to the IT guys, and I learned that all of those PDFs were generated from a SQL available database in Oracle that we could actually extract from. And ultimately, I automated my job, which was mind numbing and horrible. And that's over 25 years ago. So fast forward to today, and there's still a lot of these manual data entry problems that exist, and particularly in finance, that we have new technology that's available for, that we can start to do automation around what used to be a really paper-driven manual process. And specifically, PandoAlts, we're focusing on the last to change, which is the alternative investment space. So, for your listeners, if they have invested in private companies, if they have real estate holdings, if they get K1s, they understand this problem, which is that there's multiple different disparate locations that they have to pull information from to get that into a holistic view of their book, everything that they have. And it's typically a manual process. You get a notification that there's a update. You're prompted to go log into a portal and pull statements or capital calls or distribution notices. And that extraction of data from that unstructured document is manual. You're keying it in, or somebody else is keying it in for you into some type of a reporting tool. And this is 2025, and we're still doing this. So, it is now take that problem. So that, I've got 20K ones I've got to deal with. I've got, a report from my real estate holdings, and put it into the wealth manager's business. And you're talking about now thousands of GP relationships. And literally today, publicly traded companies are logging into thousands of websites, downloading these event notifications to their local machines and manually typing that information into antiquated backend systems.
What
So
is that costing? I mean, I
tons
have
of
to,
headcount, you know.
yeah.
So yeah, there's really not hasn't been a really good solution for it, but except for throwing manpower at it. And so we call it, human capital arbitrage. You can
Mhm, mhm.
offshore it, and send it to an admin solution, but they charge you by line item because there's no other way to charge. So, from my experience in finance throughout my career, and as you mentioned, AI and digital assets, I've started to see that this is a problem that can be solved, that we can solve with technology. And today, with the advancements in large language models and agentic AI, we can start to take that human out of the loop and provide more efficient processing. And that's what PandoAlts is really focused on doing, specifically for the wealth manager that has the scale problem. They have the thousands of websites they're logging into. But ultimately, that'll trickle down into the rest of us to give us better access, less kind of operational friction, which reduces cost, and can give us the diversification that we need in our investment portfolio, that the ultra wealthy have always enjoyed because they have the money to pay for all of that operational bandwidth to access that part of kind of a diversified investment portfolio that hasn't been accessible to the rest of us. So,
Mm.
as I started doing my own private market investments, my wealth manager couldn't book it. I ended up having to pull money outside of that wealth manager and put it into a broker. And then all of a sudden, I'm dealing with that problem at a smaller scale, where if I get hit by a car, my wife doesn't know, where to find everything, and
Mhm.
she's got to go into my password protected, Excel sheet. So
Yeah.
we're now kind of advancing that to where I believe that having alternatives outside of just equities and fixed income is a important part of a diversified portfolio. And I want to kind of reduce that barrier and bring it more to the middle market, which is a large part of the asset base of the United States.
Mhm.
Probably half of it is the ultra high net worth, half of it is this middle market underneath, that typically hasn't had access, and we're changing the game here. And I think it's an important change. And when you look at the volatility in the equities markets right now, thematically, I think it becomes even more important. How do we get some things that aren't correlated to our equities portfolio, and do it in a way that has kind of an AI lens on top of it that can make it more accessible, understandable. I don't have time to read 200 pages of a private placement memorandum. I would
Yeah.
like the Cliffs Notes and see if this may be a fit for my portfolio. So that's
That's amazing.
what we're doing here.
I love that. So, I mean, in short, what I hear is better data, better decisions. And in turn, the faster that we can get and interpret that data, the sooner that we can make a better and more educated decision. I mean, our decisions are only as good as the data that is coming into us. So, I mean, what you're doing is helping to streamline, simplify, and operationalize what have been otherwise very manual and tedious tasks to this point. Um,
Well, and to help that poor kid that, just graduated college that's sitting in the basement tied to his desk typing from 1,500 websites.
yeah.
Like we need to give them more purpose and better things to do.
I'm curious about that. That was actually one of the questions that was in the back of my mind as you were talking, as I'm sure that, um, it's not necessarily the audience that I tend to attract, but, a lot of the population, they're freaking out about their jobs being replaced by AI. And, all it means to me is, again, every problem creates a new opportunity, right? So it's like, if these, what I might refer to as more remedial positions that just about anybody can perform. I mean, you're taking data from one source and putting it into another, are now being replaced by software and automations. What happens with those individuals and roles? And I'm curious what your take on that. I mean, I know what I would be suggesting is, hey, this is great. This is an opportunity for us to level up and actually pursue something that we're really passionate about and be rewarded more because of it. But, what are your thoughts around that?
Oh, I'll give you a good example. So the let's say family office that I'm dealing with, part of the reason that they came onto the PandoAlts platform is because they said today, based on the amount of work that it takes for us to evaluate one deal, one real estate deal, one private equity deal, we really only have bandwidth for about 100 of these real estate deals a year.
Hmm.
But if we can look at 300, ultimately we're going to have better quality at the bottom of that funnel. We're going to find things that we may have missed before. And what does that do ultimately? What it does is it brings more opportunity to more real estate GPs that have interesting projects that need to be funded. And I think that in today's distribution for these types of things, the biggest of the biggest are the ones that can afford to pay for the distribution channel and get it into, the eyeballs of the larger audience. And with this new technology, now maybe, a new GP, a new guy that decided he's got a great idea, he wants to go run on, can get exposure in a way that they couldn't before. So I think that what it does is it lowers the barrier to being entrepreneurial, to having new products that start to get deployed into the markets and in a more efficient way. So I just think that rather than going through 200 pages of documents manually, now I can go through 10,000 pages of documents at the same amount of time and that it's taken me before. And so we're not offshoring that work. We're not sending it overseas. We're actually
Hmm.
providing tooling that is giving, more agency to that, person at the desk that was spending way too much time doing manual entry. So that's how I see it, Zach. I think
Yeah,
that
I
there's going
love
to be
that.
a benefit to everybody that really starts to provide more value to us all.
Hmm.
Because ultimately, the cream will rise to the top and great
Hmm.
ideas will get a new audience that they never had before.
Hmm. Yeah, I love that. That's a really fascinating take. And, it's so funny too, just how polarizing perceptions can be when it comes to the advent of any kind of new technologies. And initially, for most people, it's the fear that surrounds the idea of having themselves be replaced. But the reality is, at least historically, for every job that's been replaced, I think it's like two or three more have been created. So to date, we're still heading in the right direction. And we also have a shrinking job market. The not in terms of available jobs, but in terms of available employees, with all of the baby boomers retiring. So it's actually a huge opportunity for people to actually pursue things that they're passionate about and create new things altogether. Um, this is this is really cool what you guys are doing. One thing that comes to my mind is looking to AI and the softwares. It makes complete sense. I leverage AI far more often than I ever thought I would have been, particularly even in contrast to just a couple of years ago. And at the same time, I'm still running into, periodically, for the most part, it's very accurate and effective and efficient. But periodically, you get those, not kind of
Hallucinations.
anomalous, weird feedback, the hallucinations. Exactly. So, how are you guys? Are there safeguards that you've built into your AI? Like, I mean, how, I mean, to me, it implies there's a tremendous amount of trust that we are placing in these softwares. So, what what are you doing to make sure that the outputs that you're getting, the feedback that you're receiving, is something that you can take action on and do it confidently?
Yeah, so we have QA. We also have recursive look-throughs that show us the methodology used to derive the information we extract, but also if it's document based, unstructured documents, we have a recursive look-through that actually highlights where the data was extracted from. So there's definitely, again, like tooling on the desktop that just accelerates that. It's not a full replacement for humans that go into
Hmm.
that. But in
Hmm.
that previous example, if I was looking at 100 deals and now I can look at 300, I can quickly sift out the things that just don't match what I'm looking for. And think about it from like a private company standpoint. For me, as an early stage company, looking at potential investors, I would much prefer that I had matches for exactly what potentially could be an investor with me, and have a better understanding of what they're looking for and what I have, and before I even have the conversation. And today,
Hmm.
the way it works is I'm doing like 400 meetings a year to try to find the five that may actually say, oh yeah, that we're looking for exactly that, and a lot of it's
Yeah.
just a waste of time.
Hmm.
So I think that we can. It doesn't take away everything at the end of the day, but it does again bring more audience for better matching,
Yeah.
and I think that will ease the flow of capital, and in a way that we've never seen before. So
Yeah.
how do you find the next great crypto fund? Today you'd be in Toronto for consensus. You'd be going to every conference, you'd be on a flight, you'd be meeting with as many people as you could meet to filter it down to exactly like, okay, this is the corpus that I think may be a match, but I'm also going to miss a whole bunch of them that didn't fly to Toronto for consensus.
Hmm.
So better data actually does, I think, a lot of great things for both sides of that coin, both the allocator and the supply side, that uh, makes our interactions more meaningful. We're hitting the
Hmm.
right audience, and again, it's a data driven world that we're moving into. But you know, eh, also just to go back to the AI thing, we've still been arbitraging human capital overseas for a ton of this manual work. And
Yeah.
even when it comes to just production of goods, we all know this, and there's tariff wars going on. There's other places that produce cheaper at maybe the same quality level, and we're going to source that because there's an arbitrage doing it. It doesn't change our consumption patterns, though. We're still able to eat the same stuff at the store.
Hmm.
So I just think that we're getting more efficient. More people are going to pop up and be owners of businesses because they can fill needs without the same level of cost that they had before. And I think it takes the power out of the hands of the super big companies and starts to move it into a more dispersed kind of
Hmm.
universe where buying local is easier, and we're starting to produce more things, without having to ship it on a tanker overseas.
That's a really neat and exciting, perspective. I mean, I love to hear that we're moving that
I'm a tech
direction
guy,
too,
though.
right?
I
Yeah.
believe in tech. I think it's a good thing.
Well, I think we should, right? You got to have that passion and pursue it wholeheartedly. What's so interesting about this is completely different context, in terms of utilization. But I mean, it sounds to me like it's a semi-similar outcome. Like I was watching I think it was a documentary on Netflix or Prime or something fairly recently about how archaeologists are now leveraging AI to be able to find potential dig sites exponentially faster than they ever would before by just running all the geography and topological maps and satellite imagery and all this stuff where they can, run various data patterns to look for certain consistencies or inconsistencies that highlight what could be a potential location for a previous civilization, or sometimes it's the not the hieroglyphs, but those, pattern, maybe it is hieroglyphs, those giant patterns that are carved into mountains or on plateaus and landscapes. And, they were talking about how where they might be able to go view one every few months and just attempt to break ground to see if there's anything there based on a guess. Now they can run hundreds or thousands through, predetermine in advance the probability of digging at a location and finding something new. And again, totally different context, but you guys are leveraging the power of data software to be able to allow us to interpret a lot of this stuff a lot faster so that we can make better decisions more quickly. And what I'm curious about is, you talk about the mid-market aspect. It's like, and I feel like there's a really big pull this direction for a lot of people. It's been the ultra affluent, the top 1%, top 10% for so long that have had the perceived access. We've all had access, but maybe most of us didn't have the education or perspective. What was part of the decision, the desire to start serving that mid-market for you? And then I want to dive a little bit more into how the technology works, because my mind immediately starts going to things like, Zapier and 8 million different integrations. And then, you got a Zap that breaks and all this kind of stuff. So I'm like curious what, if you can kind of provide a high level peek at how this looks, but talk a little bit more about just that drive, why the mid market? And I heard you say it a little bit, but I just love to hear you expand on it a little bit more.
Okay, so I'll also go backwards a little bit and
Yeah.
take you back to 2016 when I was at my satellite company that was essentially computer vision applications for petabytes of satellite data. So these high resolution satellites and the low Earth orbit satellites were collecting massive amounts of data. And so the US government has a group called the NGA, and they have 50,000 people in DC that look through these pictures all day. And even
Whoa.
so, it would have taken the entire city of Manhattan to actually look through all these pictures every day. Like, it's just too much data for humans
Hmm.
to optically be able to process. So what we did with Orbital Insight was we built algorithms that could detect objects and run it through those petabytes of image files daily. And now that 50,000 people at the NGA building could actually have their time better spent to focus on anomaly detection as opposed to, trying to scan through something that wasn't humanly possible to do.
Hmm.
So again, just saying, like, we're not replacing people. We're just making
Hmm.
people more effective. And to your
Augmenting.
point, like, how can we find, some, new dig sites? How could we see a methane leak on a pipeline before it happens? Well, this technology, this advancement is starting to
Healthcare.
really, yeah,
Hmm.
self-driving cars, So
Hmm.
anyway, that I think there's all good things that are coming out of that. And to your question, I personally was hitting this problem. I was starting to say, okay, I'm going to invest in a fractional piece of a farm, or my real estate holdings are over here, or I want to get into digital assets. I'm a Bitcoin maxi, and I believe in this new kind of blockchain world, and I couldn't do it with my existing wealth manager. And I've
Hmm.
been in fintech for my most of my career, and I was just wondering why. Why can't I do it with you? Like, that doesn't make any
Yeah,
sense.
yeah.
And
I
how
love
can
that
you
question.
actually be a fiduciary for me if you don't know what my holdings are? If you don't have my entire book, like, then how can you really make educated discussion with me about what I should be doing with my investments if you don't know what I hold over here, you don't know what I hold over here. And why am I paying you for that if you're just going to put me into an index anyway? Like,
Yeah.
so, and the next generation starting, the Robin Hood's a good proof point. Like, they're happy, or
Mhm.
Wealthfront, they're happy to do it on their own too. And I think that that's coming, to your point of the boomers retiring, and the next generation is going to inherit, quite a bit of wealth. What are they going to be looking for? And I think that it's going to be, things that could impact our community. If I move to Bozeman, Montana, I want to know all the things that potentially I could invest in that are here local. What could I do, to offset my tax burden with charitable investments that can benefit my local community? And those are things that typically people don't have access to, or
Mhm.
it's really hard to find because the data is so fragmented in different buckets.
Mhm.
And we can start to build it in a way that kind of creates an MLS, if you think about it, in real estate,
Yeah.
where everything can get listed. And now I can put tooling on top of that. And if I was looking for a house, I say I'm looking for a, 4 bedroom, 3 bath, and, this amount of real estate. I get all that filtered down to what I'm actually looking for. And there's a lot of benefit to that. So that's why I said, hey, let's go tackle this really kind of big, hairy, audacious goal, the BHAG of all of this has been distributed and fragmented for so long. And the only technology that's come out to kind of provide access has been through broker dealer lenses. So they're, companies that are promoting and curating and taking carry in the deal flow. And that to me is like, when I started out on Wall Street, it's like, equities back before electronic trading in some ways. And it was a much more inefficient place, and it was much more difficult for people to have access to. They had to go through a much higher cost structure to get the same type of return profiles that you can get now, through index products and through things that are much simpler. So
Mhm.
that's where I go with it. But I've said this in some other kind of interviews that I've done, but my great grandfather was one of the founding members of the American Stock Exchange. So back then, it was a bunch of Irish guys, on a corner, and it became the American Stock Exchange over time. But it was a group that got together to transact on new companies that weren't listed on the big board at the time, the ones
Mhm.
that became the New York Stock Exchange. So I guess it's in my DNA. I'm always looking
Yeah.
for an alternative to, what's the status quo that, is the high barrier to entry. Well, there's a bunch of companies that are great companies, great founders that need exposure. And how can we find an alternative way to get it for them in a way that isn't just, pay to play broker sponsored stuff?
Okay. So your primary focus at the moment, and I'm going to make the statement, and then I've got to come back to two other things that I heard from you. Primary focus is really the B2B mid-market at this point and how they can
Yeah.
best leverage their data. What I'm curious about too is if there's opportunities, if you foresee in your, ultimate future goals, if you're at all entertaining the B2C market and how the average person might be able to leverage this information. So that's one thing I want to discuss. Two other parts that I thought was really interesting is there's this we you talk about the financial advisors, and it's so interesting hearing your perspective, especially with your background, about how people tend to become so siloed, which if you're not taking, like you said, a holistic look at your financial infrastructure and investment decisions, then you're just throwing stuff at the wall and seeing what sticks, essentially. And not to mention the fact that a lot of people aren't aware of the fact that a financial advisor um, can take hats on and off. Like, are you a fiduciary and just a fiduciary, or are you a financial advisor and a fiduciary? And I could switch hats without telling you which one I'm wearing, and not necessarily navigate things in the most morally or ethically driven decision paradigm. So I mean, it's cool that it's almost like you're creating another layer of uh I don't know, I don't want to call it safety, but like, so yeah, maybe it is safety. It's a certain level of security that you can actually trust these individuals because now you have a look at the big picture. So I see more clarity which again is going to help influence decision making. And then I'm curious about that perspective. Like, what is the long-term goal? Is it to stay in this B2B space? Is it to continue to democratize and drop and make this more available to any and all people? And then the third piece I want to talk about was a little bit of crypto, but we'll get into that in a second.
Well, so Uber started with black cars.
Hmm.
The highest level of demand right now is where we're going.
Yeah.
And
Hmm.
if you have an existing alternatives, book and exposure, then this today is equities in the 80s. It's super
Hmm.
stuck in this paper-driven, nasty manual process.
Hmm.
So, family offices, private wealth groups. I mean, we're solving a problem that dramatically reduces their cost structure and the time.
Yeah.
So anecdotally, you know, days, a third of operations time. I get quotes all the time from these customers saying, like, this is such a lifesaver for us. But I think that if I'm going to be a wealth manager in the new world and new paradigm that we're moving into, and I'm going to be competing with robo advisors, I need to have something that adds additional value. I mean,
Hmm.
and I think that the new generation of investor is going to demand it. They
Hmm.
can get it for free with or very low cost from automated services. And if I'm a wealth manager right now, I'm going to be pushing to differentiate and provide a better balanced portfolio with access to things that are important to that customer, to that investor, to that LP. But I also, as I invested in digital assets, et cetera, and I know you wanted to dovetail into that. Um, for me, I think that the wealth manager is still a very important part of your life. And a lot of people joke that it's the second call on your deathbed after your wife and family is
Yeah.
is my guy, my girl, whoever's going to be trying to make sure that everything's taken care of post that. When I started to take money out of my existing wealth manager, who I used to trade with on Wall Street, he's a buddy of mine. I
Oh,
felt
awesome.
bad. I feel bad taking my money from him, but he couldn't facilitate digital assets. And
Hmm.
so I said, "Well, look, dude, this is an important part of my thesis. I think that there's a paradigm shift happening that's similar to electronic trading when we started out." And he said, like, I totally agree. He's like, but we just don't have that set up. There's no infrastructure here to do it. And, I've heard this talked about before, and I think it's a really important point. The wealth sector has really, they're stuck in a lot of manual process too. And the old legacy infrastructure that they have to deal with is a problem for them, even if they want to move into democratizing access to new product types. So, as an example, if you want to open up a Robinhood account, you can do it on your phone and it takes you 2 minutes. You want to open up a relationship with, the private wealth guy down the street, and it's going to take you weeks and tons of paperwork and DocuSigns.
Yeah.
And so that I think is going to change and has to change. So it's all changing for the better, though, in my
Hmm.
my opinion. I think that having a diversified equities portfolio means that you are beta driven to the stock market, and we can all talk about 9% annualized returns in equities, but tell that to people retiring in 2008.
Yeah.
They lost 50% of their portfolio and went back to work.
Hmm.
And there's a lot of downdrafts in these cycles and a lot of flat lines in these cycles that not everybody kind of sees when they zoom out to the larger picture, um, which is fine, if
Hmm.
you're not trying to retire in 2008.
Yeah. You brought up something really interesting just now too. And which again, this is another conversation that can be taken across context, but you talk about infrastructure. And like the thing that popped into my mind in parallel to this conversation around financials and data is energy. right? It's like we are a fossil fuels dependent economy, right? It would be virtually impossible for us to make a night and day switch to electric cars, or I mean anything and everything electric at this point. It's going to take a very long time to rebuild that infrastructure. As it pertains to your particular niche market and category and data and a lot of these big banks and all of the different sectors that are holding this information, is it the same type of battle that you might be experiencing? I mean, is it the same type of reform where you've got a massive undertaking to rebuild that infrastructure to be able to support what's next? Or, what does that look like? Because everything's so exponential.
You know, it probably goes back to why I enjoy early stage companies so much.
Mhm.
Because at our early stage, we can change the game. We can
Yeah.
build something brand new. We can go pivot to a better technology approach to an existing problem. And the legacy solutions, once you get to a certain level and you get acquired by private equity, now all of a sudden that private equity buyer is typically going to finance the purchase. So it may be a cash purchase, but they've got 50% debt on that, and they're counting on the cash flow of that legacy company's business to pay off that debt so they can 2x that investment. And I've seen it over and over again. It's an easy, like, if we do this for 5 years, we pay off the debt. If we keep valuation the same and we flip it, then we 2x, and that's great at scale, right? But what does that mean? That means that we can't cannibalize existing cash flow in our business to iterate into new tech. We're just not going to do it. So that's why you see all these cycles in legacy technology. They peak and then they start to, get private equity capital, and then eventually they trough. And then there's a new entrants that are coming in to replace the legacy infrastructure.
Mhm.
So again, I've seen that movie over and over and over again. There's
Yeah.
jokes about these publicly traded holding companies that buy these tech platforms, and we call it where tech goes to die.
Yeah.
It's just a squeeze of the cash flow. And if the revenue's not expanding, then we're reducing costs to ensure that cash flow stays constant or is expanding on that product until we squeeze the life out of it. And what happens? Well, new technology pops up, new players come up, and they ultimately start to take that business away from the bulwarks that are out there. And
Yeah.
we're just in this new transitional phase with AI being the catalyst that we can do so many things that you couldn't ever do by trying to refactor the existing technology that has existing cash flow being generated out of it.
Mhm.
One, refactoring that old tech doesn't really work with AI. AI is very data hungry, and you've got to be able to have the data super accessible. And if it's in a tangled line of code, like fishing line, it's really
Yeah.
hard to pull all that
Mm.
out and try to find the data that you need. So I think that in this new paradigm, you've got to look for the new technology players that are have experience with the old way of doing things, but also have built for the future. And again, it's really hard with legacy technology to do that for a variety of reasons that aren't just technical.
Yeah. I love that you said that, built for the future. I've worked alongside some of the most brilliant minds in the world today, and it's so interesting how often you witness that pattern, the power of anticipation. It's like, every one of my listeners has heard me say this before, but I just love this analogy. I mean, it's like you talked about Wayne Gretzky, what made him the best in the world. When you ask him, he goes, most players skate to where the puck is. I'm skating to where the puck is going. Because he had studied everybody. He knew what if they were leaning this direction, they're going to cut back this way. Like he could anticipate every single thing that they were going to do, both on his team and the opposing teams, and it allows him to, in essence, see into the future. And that's really what you guys are taking as far as an approach is how do we maintain, from what I'm hearing, how do we maintain that flexibility of being a smaller firm while leveraging these new technologies as they come about and having that willingness to pivot, which is also a really strong blessing and gift. I'm curious, what if a company is how are you finding your current clients? Like for our listeners, if they're thinking, oh, this sounds really intriguing. This is something that I would like to explore. How is it that they can best get started with you? And I'm also curious what that process looks like. Like, is everything custom that you have to build? Do you have certain, scaffolding that, like you talked about, it's as good as the data and where you're getting it from? Like, do they have to have certain things in place to be able to extract it? How do you make these determinations of who you can work with, when, and how, and what does it look like when they're onboarding with you?
Yeah, so just being in the industry for as long as I have, we're kind of known entities when we go talk about technology.
Mm-hmm.
There is a drive for institutions to start leveraging AI and their processes that go all the way to the C-suite and the board that's behind that saying, what are you doing about AI? It's coming up in a lot of the older kind of guard institutions of what's going to be our strategy. And we've got a really good narrative for that. The problem that we're solving right now is I need to get the information from here to the back end. And the way I've been doing that is manual. And so if we can put AI tooling in, we can easily show an ROI for putting in, a better mousetrap that repurposes some of that time for more important tasks inside of our organization. And so a lot of it's my network. A lot of it's just, starting to put our name out there and get some awareness out there. And people are very aware of the problem. It's if we can have a solution for this, then we're fair game on that. And honestly, the rebuild of this technology layer attracted a lot of talent. We were able to pull in devs because they didn't want to work on legacy code base to try to figure out how to solve for the future. It is we call it tech debt. Like technical debt is a real thing. It's really difficult to go rebuild for the future on legacy technology. And so, I guess does that answer your question, Zach? I mean, I think a
Yeah.
lot of
Mhm.
it is just people are aware that the AI is coming, and they're trying to get their arms around, what can it do for us and not replace us all.
Yeah. Yeah. When you said it was coming, my brain immediately defaulted to a scene from the Terminator. So I'm just thinking about it in a more optimistic lens and pushing that view out. Now, as we wrap up this today's episode, Cash, this has been super, super insightful. I like to ask what I call a legacy check. If someone were to describe your impact 20 years from now, what do you hope they'd say?
I want a better, more diversified investment portfolio for the next generation of investor that isn't limited to the top 0.01% of the population. There's a reason that the top 0.01% of the population is invested heavily in non-correlated assets to the US equity markets. And it needs to be propagated to now my children, my 10-year-old and 8-year-old, they can start to have, their correlated book that they're invested in, but then also, use their money for things that they think are impactful to their own, ideas around what's right, the benefit their local communities wherever they end up planting their flags. And I think that that's a huge piece of progress in a, you know, today $14 trillion market that's moving to 30 trillion by 2030 if you look at the statistics. And we need to start to bring access in a more easy to manage way to a larger breadth of population.
That's amazing. Three big or a handful of big takeaways that I took away from today's conversation. Um, you know, One, it's the sheer amount of data that we have, And then oftentimes the siloing of that data or not knowing what to do with it or how to best extract it so that we can make better decisions faster. So what you are doing is simplifying a very complex problem and democratizing these resources. So now more of the mid-market organizations have access to these things. And the coolest thing about what I'm hearing from this is how you're creating opportunities for them to grow at an exponential level at a rate that's 2, 3, 5, 10x what they were able to previously, just because of the amount of time that it would take to go through and vet so many of these different opportunities, looking at private family offices as an example. And in doing so, now that they're able to make more investments strategically, we're experiencing that trickle down effect where it's going to help bolster the entire economy economically and across so many different industries. I mean, it's just really exciting to me what you're doing and how it can have such a massive impact and how you identified the problem in such a beautiful way. I love entrepreneurs for these exact reasons. It's the questions they ask. And the one, it's like, inherently what we're like the little kid. Why? Why is it being done this way? Why can't we do this different? And it's like I drive people nuts. I'm always asking why, but I'm like, I'm curious. I want to fix problems. So I love what you're doing. Is there anything as we wrap up that you'd want to add to that in terms of, is there any critical pieces that I missed that you'd want to highlight? Any tips that you would say are paramount for any of our listeners as they are considering how to integrate or utilize some of this data more effectively? What would you like to add?
The only thing that we didn't really jump into is this new advancement in blockchain. I think it's
Hmm.
a super interesting part of this new paradigm of clean data, democratized data, non-centralized data by Bitcoin. I'm a big fan.
Yeah.
Uh, I think that we have two big technology transitions that we're moving into. One is obviously machine learning AI. The other is the decentralized blockchain layer that is now kind of coupling together to create something that we've never seen before, but that will create more efficiency across the board.
Hmm.
And decentralization is a good thing in my mind.
Hmm.
Buyer beware. There's still a lot of problems. It's very early, but at the same time, exciting time to be around.
Oh, yeah, no kidding. I think about that all the time. For some reason, a lot more recently, like what my grandparents saw to what my parents have witnessed to what we will witness, and then our kids. It's just it's hard to conceptualize and wrap your heads around. But I wholeheartedly agree. These are
The
exciting
world, the
times.
world, yeah, the world's going to be dramatically different. Not in
Mhm.
10 years, in 5.
Yeah, that's
We're
the
we're
great.
moving we're
Yeah.
moving really quickly here. And you asked earlier, how do we make sure that there's no hallucinations? I will tell
Yeah.
you that the AI we work with is getting exponentially better every month. I mean,
Yeah.
it's amazing how fast it's moving.
Yeah.
Again, I think to a much more efficient world that provides new opportunity for people that weren't given visibility before.
Yeah, that's beautiful. I love that. Well, to our guests, thank you for spending your time with us on the Perpetual Growth Podcast, and a big shout out today to Cash Lafferty for bringing so much value to today's conversation. Cash, where can our listeners connect with you or learn more about what you're working on, or get in touch if they would like to figure out how to leverage you guys for some integration?
Yeah, so my LinkedIn handle is just, Cash Lafferty at the end of LinkedIn /N. PandoAlts.com is our website where you can request access to get onto the network. We have AI tools that are available for free for Zach's listeners. So log in, check it out. And if you're a GP, product originator, you're looking for distribution and you want eyeballs from a institutional investment community on some deals that you're building out, you can get through the same portal link there too. We do service kind of both the allocator, the product originator supply side, and the distributor community. So excited about the future of what we're going to see here. And Ultimately, I hope that in the not so distant future, you can fly to Bozeman and say, "Show me everything available to invest in Bozeman."
Yeah, that's amazing. I love that idea. Well, again, to our listeners, you can find Cash. It's linkedin.com/in/Cash Lafferty. Jump onto his website, pandoalts.com. And again, he's got some free resources for our listeners, which is really exciting. And to all those GPs, product originators, make sure you guys are reaching out to Cash and leveraging his depth and breadth of experience. He's bringing so much to the table. I'm really excited about what you're creating. Now, if this episode sparked something for you, don't keep it to yourself. Be sure to share it, subscribe, and leave us a 5-star review to reach even more people on their growth journey. And remember, growth doesn't happen by chance, it happens by choice. We'll see you next time.